If you were watching the markets last week, you probably felt it. That sudden snap from calm to chaos. Gold soaring to record highs, oil crashing to 5-month lows, and investors running for cover as confidence evaporated in a matter of hours. From trade war threats in Washington to political meltdowns in Europe and leadership turmoil in Japan. This was the week global markets reminded everyone what risk-off really means. Why did it all happen so fast? And what does it reveal about how macro forces move markets today? That's exactly what we break down in this week's MacroNav, your market compass through the chaos. So don't just scroll past the headlines. Watch the full explainer to see how macro moves markets. And don't forget to share, like, and subscribe so you never miss the next shift.
You know, if you were watching the global markets last week, you probably got a pretty serious case of financial whiplash. I mean, things went from kind of optimistic to just downright turbulent in what felt like the blink of an eye. So let's break down what exactly caused this perfect storm of anxiety.
And right out of the gate, you see this really weird puzzle. On the one hand, you had investors just stampeding into gold, the classic safe haven, pushing it to an all-time high. But at the exact same time, the price of oil, a huge indicator of global economic activity, absolutely plummeted to a 5-month low. So what in the world is going on here? Why are investors bracing for disaster and betting against economic growth at the same time? It doesn't seem to add up.
Well, the answer to that puzzle lies in one single, really powerful financial concept: risk-off sentiment. This is the key. This is the phrase that unlocks this whole seemingly contradictory story. So, what is it? Put simply, risk-off is what happens when the collective mood of the market just sours. All at once, investors get scared about the future and they decide, you know what, it's time to stop taking so many chances. So they start selling off their riskier stuff, like stocks, and they pour all that money into safer assets, like gold. It's kind of like everyone in the casino suddenly deciding to cash in their chips and head for the exits, all at once.
Okay, so we know this big wave of anxiety hit the markets, but where did it come from? To really get that, we've got to put on our detective hats and look at the different pressures that were building up in key places all around the world.
So our first stop is the United States. And here, the markets were rattled not by one, but by two major threats that just kind of reemerged out of nowhere and completely wiped out any optimism from earlier in the week.
And you can see the damage right here. It was across the board. The S&P 500, which has 500 of the biggest U.S. companies, the tech-heavy NASDAQ, the blue-chip Dow, they all took a pretty significant tumble. All those earlier gains for the week, gone. Just a clear, sharp loss of momentum.
And this quote, "This was the match that lit the fuse." This signaled the sudden, abrupt return of the trade war and all the unpredictability that comes with it. And why is that such a big deal? Well, because tariffs can jack up costs for businesses, totally disrupt supply chains, and ultimately slow down the whole economy. Investors heard this and immediately started pricing in a whole new level of risk. All right, now let's hop across the Atlantic to Europe, where, believe me, the story was just as grim. The whole continent was on edge, really caught between its own political messes and some seriously weak economic news.
Just look at this single, shocking number. This comes from Germany, Europe's industrial powerhouse, a 4.3% collapse in industrial output in just 1 month. Wow, that's not a slowdown, that is a screeching halt.
And this right here, this is so important. This connects directly back to that mystery we saw at the very beginning. Remember we asked why oil prices plunged? Well, here's a huge reason. When Germany's massive manufacturing sector hits the brakes this hard, it means they need a lot less energy to run all those factories. The market saw this number and immediately thought, whoa, global demand is going to be way weaker.
And, as if that economic news wasn't bad enough, you had political instability just flaring up. Over in France, a full-blown government crisis erupted after the prime minister resigned. That raised some really serious questions about the country's stability. And meanwhile, over in the UK, the housing market, which is a huge pillar of their economy, just kept on sputtering.
Okay, let's head over to Japan now, which you could argue had the most dramatic, whiplash-inducing week of all. The market there went from this spectacular record-breaking high to a state of serious political uncertainty in just a few days.
I mean, this timeline just says it all, doesn't it? The week kicks off with a bang. Sanae Takaichi wins the big leadership race and the market goes absolutely ballistic, soaring to a record high. The celebration, though, was cut way short when news broke that a key partner was leaving the ruling coalition. And just like that, poof, all that confidence completely evaporated.
And for our final stop,
Let's look at China, a place that's so crucial for global growth. The issue here wasn't some sudden shock, but data from the recent Golden Week holiday that uncovered a trend that's got a lot of people worried. The Chinese consumer is starting to tighten their belt.
Yeah, the difference is pretty stark. You see, sales growth during the big October holiday was less than half of what it was during a similar holiday just back in May. And that is a huge red flag. For years, the story has been that China's giant consumer class would pick up the slack from a slowing industrial sector. This data, well, it suggests that whole plan might be in jeopardy.
Okay, so we've seen the storm clouds that were gathering over each region. Now let's kind of zoom back out and look to the future. What are the big risks on the horizon that could trigger the next wave of volatility?
Looking at all the source material, there are 5 clear threats you got to keep on your radar. Number 1, things getting even worse in the US-China trade war. Number 2, the potential economic damage if there's a long, drawn-out US government shutdown. 3, the risk that the political crisis in France starts to spread to the rest of Europe. 4, a really disappointing US earnings season that just doesn't meet expectations. And finally, number 5, that cautious Chinese consumer we just talked about getting even weaker.
And all of this, really, it brings us to the final and most critical question. When you see serious economic and political pressures all building up in every major part of the world at the exact same time, you really have to wonder, was last week just a fluke? Or is this high-anxiety, high-volatility environment the new normal?
If you found this breakdown useful, hit like and share it. It helps more people discover MacroNav. And if you want more clear, no-nonsense explainers on global macro and finance, make sure you're subscribed. Stay ahead, stay informed.